Hey guys, and welcome to the video. If you haven't already, please check out my channel. You can subscribe below, and that really helps my channel to get out there, get into new audiences, and help people find out more about getting started with investing. Today is coming off the back of a conversation I had with a friend last week. He's getting into the investing world and he's very new to it, and he had a lot of questions, and some of those questions are awesome questions for those who are getting started investing, and that's what we're going to cover today. So today is going to be all about how to actually compare ETFs. Now let's say you just started out in investing and you're ready to make your first investment. A lot of people might have heard about ETFs or ETF investing, and maybe you're thinking about what's the best option for you. So what do you actually do now? And today we're going to get into how you would actually choose an ETF, one or the other, because there are around about 438 ETF products available. How do you choose which one? Let's get into the video. We're going to talk all about some of the ways that you can compare different ETFs out on the market. And for comparisons, we're just going to use one of the most common ones, which is the US tech market. One question you might have is, why are there so many ETFs? If there's just the one index, say for in this example, the NASDAQ, couldn't there just be one product? Well, you're not wrong. And the key principle to remember here with ETFs, at the end of the day, that they're companies that are actually making these ETF products. They want you to buy from them. And that's why, or that's how technically they make money. So BlackRock, Vanguard, iShares, State Street, all of these companies want your money. So they make these products so that you'll come over and buy from them. So just remember, at the end of the day, ETFs are a product, and these providers want you to come over to their company, so they're making these products available to you. That's why there's so many ETFs out there, and some of them are very similar across different companies. They want you to buy their product over anyone else's. So if we just discredit the fact that it doesn't really matter who we go with as to what product we buy, the next key things you have to look at, let's use, for example, the NDQ on ASX, Triple Q, which is listed on the US stock market, and then ACC, which are all tech market trackers. They track the NASDAQ. So we're going to jump over onto the computer now, and I'm going to show you side by side how we might go about some of these ways to value and compare these ETFs so that you can make the best decision for yourself. Let's get stuck in. So one of the first things we're going to look at is the price of each of these products. So you won't be able to see it on their fact sheet, but if you're tracking it on any of your stock screeners or stock watchers, you'll be able to find the price. So that's going to be a big thing, because if it's incredibly expensive, it may not be within your price bracket, versus if it's quite cheap, then it may be within something that you want to invest in. So that's one thing that you're going to have to take into account first and foremost. From there, one of the most important things when comparing these products is the management fees. Now, these ETFs are more of a passive thing. They don't have any sort of active investment, but they do have a fee that's required to manage that product itself. So what we can see from the NDQ one here is our management fee of 0.38% per annum. Then we head over to the ACC, and we can see that their management fee is, or expense ratio in this case, is 0.22%. And then we roll over to the Triple Q, and we'll find, some of them can be quite hard to find as well. So ongoing charge there, 0.3% per annum. So it seems in this case that NDQ is the more expensive, just due to fees. Now, some of these ones take into account NDQ is on the ASX. These other ones are on different indexes, and therefore if you were to invest in them from inside Australia, you would have to pay maybe currency fees or any sort of fees on top of that. So that's something that you have to take into account as well, and that's all weighing up how expensive the product is to own. Then we look into what their dividends are. Now, if we scroll down, we can see the distributions for NDQ are semi-annual. We'll see on ACC that the distributions doesn't seem to have any distributions or any dividends. And then the Triple Q is dividend quarterly. Now, you'll be able to see these in some of their other fact sheet information. So that's something you want to look out for. Then we look at what companies are in its holdings. So all of these ETFs will mirror the indexes themselves, but they might have different distributions in how much percentage of them they actually own. So let's have a little look here. So down the bottom here on NDQ, you'll see the top 10 company exposures. It has around about 11% of Apple, 10% of Microsoft Corp, 7.8% Amazon, Alphabet, Facebook. It's got all the big names in there, which is almost the same as the ACC. It has 11.3% Apple, Microsoft 9.9%, all of the same ones in there. And then we roll over to the QQQ, and that has pretty much the same amount of holdings in there. So you can see there, all these three are very similar in what they have across the board in terms of companies that they hold. So that's an important thing to take into account. Then you can have a look at its allocation to sectors and to companies. So we have our sector allocation here at the top of NDQ. Information technology is 49% allocated to, communication services 19.7%, consumer discretionary 16.7%. So it goes on to list its allocation. The same for the sector allocation for ACCC. Here we have its sector allocation roughly the same amount, maybe slightly higher and lower on that. And then for QQQ, pretty much around that same rough estimate of sector allocation. And then we have to look at whether it aligns with your strategy. So when we have a fact sheet, we'll have the objective of the actual company itself, or the product, sort of, should I say. So NDQ here has the objective, which I'll bring up to front of screen. It aims to track the performance of the NASDAQ before fees and expenses, which comprises of the 100 largest non-financial companies listed on the NASDAQ market and includes many companies that are on the forefront of the new economy. The same for the fund objective for the ACC, and then for our fund for the QQQ, it has the same there. So you just want to make sure that strategy lines up with your plan. If your plan isn't to invest in these companies, then it's not going to make much sense for you to own this ETF. So that's a really great way that you can actually compare. There might be some, in this case, there's not a lot of differences. You just may want to go with one of the earlier ones. In this case, NDQ is a lot newer, and that way you might be able to get it a little bit cheaper, and it's still going to track the returns of the NASDAQ. It doesn't matter how expensive it is, you're going to sort of get the same amount. If you buy NDQ and you get 3 shares for $30, and you buy, let's say QQQ, and you get 2 shares for $90 or something like that, it's still going to get the same returns over time. It's not really going to matter what you go with. You just want to make sure that it goes with your ease of access. Can you buy it on the Australian stock market? Can you get dividend return? All these sort of things are going to be a huge benefit for you. But that's how you would look them up. And you can find all of this information. Every product, every ETF product will have a fact sheet online. So all you have to do is, if you've got an idea of what ETF you're after, type it into Google and then put fact sheet at the end of it, and it should give you a PDF of all of that. And so you should be able to tell, if you're invested in an ETF, what it does, how much you pay, and then what companies you own as a result of that. So hopefully you found this video helpful, guys, for all of you who are out there who are getting into investing and you like the ETF products and you want to know a bit more about how to differentiate between the two. Take a look at my other videos just up here for checking out the beginner investor, all of the things you need to know. And if you have any questions, pop them in the comments down below, but I'll see you in the next one, guys.